All right. Hey there, everybody. Voice is back. Feeling better. I'm going to try not to stress it too much, so the show is going to be shorter today. Man, what a last few crazy couple of days here. Anytime you can't speak, it's always weird. At least if you've grown up with the ability to speak, right? So, Christopher Inks with Texas West Capital coming at you live from just a few minutes after 11 a.m. Central Standard Time out here in a beautiful, sunny Boerne, Texas, just north of San Antonio. Soon, hopefully, from Houston. And from there, parts unknown. I don't know. I may looking at doing some traveling a bit out of the country over the next maybe year or two. So might see me coming live from different beaches. Anyway, hopefully you guys are doing all right. And I feel this cough coming on, but I apologize if I do cough there. Again, U.S. getting ready for July 4th weekend, so we're going to close down. I've got a makeup session for Monday to do with Tier 3 members at 1 p.m. Central Standard Time, but that'll be done by 2, and the office will be closed until next Tuesday in celebration of our Independence Day weekend here in the U.S. So don't forget, markets, U.S. markets will be closed on Monday as well as a result of, the holiday. Bitcoin will still be open. But, again, with the I know there was this big thing. Everybody's anti-U.S., and I understand that. But, just because you emotionally feel a certain way about a thing doesn't negate its importance, right? And so there's a lot of volume in crypto. Sorry, it's a lot of stress on the voice here. There's a lot of volume in crypto that comes from the U.S. And so when we have these big holiday weekends like this, usually those professional traders, they're out like if they don't take Friday through Monday off, they're out half a day on Friday, and then they're off through the weekend and the Monday, and then things come back on Tuesday. Now, for most markets, that usually means that there's a buy side thing happening on Tuesday. When they come back, we'll see. For Bitcoin, we'll talk about what that might mean. We could see maybe a drop over the weekend and then a buy on Tuesday kind of idea, but we'll talk about that. So, a lot of that going on there. Also, guys, hey, listen, I told you we've got a lot of things happening, a lot of things changing, and a lot more services and stuff that we're going to be launching, throughout the rest of this year. And so one of those things is these live streams that I'm doing here are going to go away. I know everybody's like, oh, all right. No, but listen, here's what's going to happen. I'm still going to post videos, and they're going to be shorter videos just of the charts and kind of get through that. But what I'm going to do is I'm going to be starting a trader psychology, podcast, live stream kind of thing that I'll probably be doing weekly, and that'll go hand in hand with the newsletter that I'll be doing as well. And so the hope is not just me, but also to bring in other psychologists and other, long-time professional traders who have insight on this stuff to talk and whatnot about it as well. So, if you know anybody or you happen to watch anybody that you're excited about with that, let them know. Have them get a hold of me. We'll get that all put in there. But the idea is that, listen, guys, I've told you before, the things that we do, the Elliott Wave, Wyckoff, stuff like that, it's simple. Anybody can learn to do it, okay? It just takes practice. The real thing that you should be getting out of these streams that we've been doing for years now is the psychological side of it, the emotional side of it. Those things, those are what's going to determine how successful you become as a trader or not. Believe it or not, guys. And so I'm going to start spending a lot more time focusing on that. Through that podcast and the newsletter and whatnot, doing all that. So you'll still get my look at the markets every week. I'll just be pre-recorded video, and much shorter in time. And then for those of you who come here because you're interested in all the insight and stuff like that, you'll be able to get that through that podcast as well. So hopefully that's exciting, guys. I'm really excited about again that's something that's really personal to me. With both my educational background and, just the length of time I've been doing this, things I've learned. And I've really come to learn that it's the psychological, the emotional side of it that's most important. So we're going to hit on that a lot. And so look forward to you guys joining in on that. Anyway, hey, listen, if you haven't joined us yet, we've had a couple of new people join at howtotradeTowin.com. We'd love to have you there. If you have and you're having any issues with your account, please just send myself or Adam Harris a message there on Discord. If you can't figure out how to do that, or you have a little bit of trouble with that, it's okay. Don't worry about it. We're here to help you. Send me an email. You can do it at christopher.inks@texaswestcapital.com or contact@texaswestcapital.com, and that'll get it over there. And we can help you out. Don't forget to follow the instructions in the email that you guys get, and it tells you how to sync up your account on the site with Discord, with our bot through Discord. And that way you can get access to those channels that you're doing there. So, hey, we're excited to see you. Say hi. Oh, here's the thing, guys. We're getting new people because we've got a special going on right now. So if you haven't seen it, I've never done this before. It's flat out 40% off every membership, every subscription level, whether it's monthly, quarterly, yearly, biannually, whatever, tier 1, 2, or 3. You can get straight up 40% off. You don't have to do anything. It's automatically done for you there. But, I got a lot of, people know that I'm a big believer in you don't know unless you ask. And so a lot of people know this now. And so they kind of hit me up. Hey, can we do something bigger? Can we do something better? So I went ahead and made 10 more coupons. I did 10 coupons. Lucky 10 is the coupon code, okay? You're going to get an extra 20% off that sale price. So even if you're a legacy member, that's going to get you cheaper than your legacy price on what you're getting there. So we've only got 10 of them. We had quite a few jump up at first when I first released it, which was great, but we've still got a few out there. So, if you're interested in that, jump there and get it. Use the code. As long as the code works, there's still at least one in there, right? If it doesn't allow you to do it anymore, they might say it's invalid or something. And then in that case, all the spots, all the extra 20% has been taken. But we've still got a few more out there. So we'd love to have you in at a really discounted price there. Join us, all right? Again, I talked about, here, I've kind of, it's just lately been a lot of this. Everybody kind of, when the bear market kind of comes in, when things are dropping, when prices are dropping, people tend to get upset. They get emotional. And they tend to blame everybody else but themselves. And so now, fortunately, sometimes I get DMs from traders, and I've gotten this quite a bit, and they really just kind of wonder, they just have all this trouble with lack of consistency in their profits, and they really start to take this position that it's because they don't have the ability to be a successful trader. They think it's something that they can't do. But what if I told you that you all have the ability to be great traders? It's just your attitude that's holding you back. Because I'm going to tell you what, that's exactly what it is. Whether it's the idea that you're a victim, that's one of the biggest ones. Again, guys, I tell you, the way that you focus in life is the way that you're going to focus in trading. And so if you don't believe in life, that you have any control over your life, that you're always a victim, that you're always held to what somebody else is doing, when you get in trade, it's going to be the same way, guys. You don't really have that belief that you can do more, that you can be more, that you can, and if you don't, then how can you expect to trade effectively? That presumes that you have the ability to change things, right? So I'm telling you, that's what it is right there. Again, as I said here, you alone choose your life. Whether you believe you're a victim or not, you're right. Whether you believe you can or you can't, you are right, because our subconscious does what we tell it to do. All right? So it's easy to blame others for your failures, right? And in life, not just in trading, but in life. But it's a lot more difficult to actually accept that you've failed, right? And then to learn from it, because failing has such a negative connotation, at least here in the U.S., right? We're told to be winners, go, 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 especially if you're like me and you come from, some past of where you've always excelled at things, right? You've excelled at sports or music or, whatever it's been, right? Grades. And so it's easy to get down with that failure, right? You see it as a bad thing, but guys, listen, failure is nothing more than an opportunity to learn. And as long as you always look at it that way, you can move on. This is that key thing I talk about so often, is moving on, the ability to move on, to get beyond where you are. And so, listen, guys, if you can just accept that you failed, that you made bad decisions, and it's nobody else's fault but yours, because that's what it is, guys, at the end of the day. And a lot of you are not going to like to hear that, and you're going to argue with it. You can argue all you want, but the truth is what I just said. And you have to accept that, because once you accept it, then you can learn from it. And if you learn from it, then you don't keep making that same mistake, which means that's the only way forward. It's the only way to make progress in life, is to accept your failures when you have them, your bad decision when you have them, and then change. If you can't change, you're not going to get anywhere, guys. So if you have this life that you want, many of y'all get into trading because you think, oh my God, I want this great life, right? And you can have it. I'm telling you right now, you can. But you have to take responsibility for the failures that you have and learn from them to do so. It's the only way you're going to be able to create that life that you want. As long as you're a victim, as long as it's always somebody else's fault, you're going to be stuck. And I hate that, and there's nothing I can do about it. There's nothing anybody else can do about it. You are the only one. It's wholly up to you, dependent on you, okay? So, so we're going to talk about that stuff and a lot more when I get this podcast thing going here over the next month or so, next few weeks, maybe, hopefully. And we'll really kind of dive, deep into this stuff and talk about emotional triggers and what's going on and why you may end up trading the way you are, okay? The goal, guys, is to help you get beyond those things, those self-imposed limitations, those things that you put on yourself, all right? Let me see here. Who's here already? Travis, what's up, buddy? Hanging out in New Braunfels like you were at Schlitterbahn yesterday, weren't you? Nevlusian, what's up? By the way, guys, if you ever head down this way toward Austin, San Antonio, or heck, I think it's Corpus is where the other one is, right? You've got Schlitterbahn. Now, definitely go to one New Braunfels. It's fresh river water they use for, not the usual city water that you get at water parks, which is really cool. Can be kind of cold at times, though. Anyway, enjoy it, though. Sevilla, what's up, man? Happy 4th of July. Well, Zobia Dollars, good to see you. Data is here. He says, patience is the art of getting angry very slowly. There you go. And you go, guys, I talk about these things. I'm human. I still make mistakes. Don't think that just because I've been doing this for so long, or I've got this specific, master's level education, that I'm going to be fall free. No, not at all. I still make, mistakes. But again, it's the idea, do you own your mistakes and learn from them, or do you always blame it on somebody else? Then that's the key right there, guys. You'd be amazed. It's hard to change at first, especially if you lived a lifetime, as a victim, blaming everybody, right? But man, you'll be amazed at how much better everything gets when you change that. Kimozabi says, the end of 2020 and 2021, so many thought they were good traders. Even when you tell them when the downtrend starts, you will need more skill than you think. Yeah. I mean, and that's the way it is, guys. Everybody's an expert in a bull market, right? Everybody's a genius. Everybody's a wizard, right? But as I say, even those of y'all just coming in, you can usually identify the trend on a larger time frame and get into it just fine. It's because you try to get where you're trying to get faster. And so you use higher leverage or higher position size, incorrect position size, that you end up, getting stopped out before you actually ever get going. But the thing is, a lot of traders make this money in the bull market, and then they lose it on these corrections, these bear markets, whatever, the sideways. And it's a tough thing to deal with if you're a trader, right? I mean, gosh, nobody wants to lose their money like that, right? But it happens, guys. It happens. So, don't think that just because you're making some money in a bull market that you're some exceptional trader, especially if you're brand new, because the odds are you're not, and that's just life. But you can become at a later date, right? Let me see here. What else we got going on here? Hey there, Blaze. Good to see you all the time, buddy. Andrew, what's up, man? Yeah, I got my voice back. Yeah. I saw you signed up as well, buddy. Good to have you in there, man. So much dang content. Just get as much of it in as possible for while you're in there, right? Um, anyway, guys, yeah, so that's kind of where we're at here. Let's jump over here real quick to the BIDI, right? This is the short Bitcoin ETF strategy. And I talked about the possibility that maybe we were looking at an ABC here. As you can see, we broke out higher. So it looks like we may have 5 done here. And so the question is, do we get a 3-wave pullback, or are we reversing here and heading down? And I think that could have, potentially bigger implications on Bitcoin, right? Excuse me, because obviously if this is being shorted down, it puts pressure on price discovery, on what price is, on what, all this stuff kind of adds into the idea of what is price, what is the price actually. And so right now we've pulled back, almost 38.2. Again, I have the line chart on here just because it's such a mess, because the volume's so low. It's a mess with the candles, right? It's a little bit harder to kind of read all that. You see these little single candle things there. So the line chart gives you a little bit better idea of what you may be kind of looking at there. So right here, I don't know, maybe a 1, 2, 3, 4, 5. Could be maybe A, B, and then C is a flat correction. So 4 could actually be playing out here and got 1 more up. So we're going to wait to see how this plays out. If the top is in here, we're going to look for a target down here at wave 4. Oh, I'm sorry, down here at, this kind of this 50 to 61.8 area. And if we drop through there, we'll look down here at 78.6, which is about that wave 2. Obviously, if we drop through the low here, well, that means, hey, we're heading down now for 5, okay? So if you're interested in keeping up with that, there you go with that. Where are we at with Bitcoin here? So Bitcoin, this was, as you can see here, this purple box was the target I had for our members. And as you can see, we rallied up well out of it. I talked about the structure here for our members and how it was pretty constructive. And we were just looking for a breakout through this swing high here to kind of signal, hey, we're probably headed up. And sure enough, we got this huge move up. Those of you that were paying attention, you saw that I got in there at 18,845.50, which was pretty close down here. The low down here was 18,603, so I got in about $242 above that low, right? Now, my idea for this trade is, if I'm correct, I say if I'm correct, if the bottom is in, like I think it may be, this is giving me some doubt here, but if it is, then the idea is to hold this position for while we just continue to rally on up. However, I've got my stop sitting right above my entry, and so that way, if it does, if the top, if it is going to head down lower, it'll just knock me out without a loss. So that's what trade this is. Now, it's a heavy leverage trade. Some of y'all may have noticed that when I posted the screenshot in there. And this confuses some people because I always talk about, risk management and these things. But I talk about it in a way that a new trader should be looking at it. I've mentioned numerous times before that as you become consistently profitable, you're going to find out that certain trades, the risk reward is going to be so much greater that you can afford to take on more risk because that reward is so much greater, right? And so you're not always going to be at that 1%. Okay? So the idea is to understand what you are doing. Now, the problem is most traders, most new traders especially, and again, what I mean by new are even if you've been, trading for years, if you're not consistently profitable, you're still considered a new trader. You're still considered an amateur trader because you haven't figured out that thing that keeps you profitable, right? More than not, right? And so if you haven't done that, then you don't want to do anything different than what I teach as far as risk management goes. You do not want to go over that 1 or, heaven forbid, the 2% stop loss there, risk management, right? You shouldn't be losing any more than 1% of your portfolio on any single trade, right? So sometimes professional traders, those that are consistently profitable, will take bigger chances on better opportunities. And that's what I did with this. And so again, and the whole goal with this trade is either It's I'm all in or I'm all out, right? So I wasn't interested in taking up here at the 1 hour, 4 hour pivot. I could have just taken profit there and been fine, right? No. Again, my thought is, okay, this particular trade, it's pretty heavy leverage. So if I'm correct, I'm going to make stupid money as it goes up. If I'm not, I'm going to get out break even. Okay? It's as simple as that, guys. If you don't understand that, you might want to relax and kind of really kind of think about what I just said there. And that way you understand, guys. It's not that I'm doing something, that I don't practice what I preach and whatever. It's just, as you will find out, as you become successful, you will find out what I'm saying here about being a trader, okay? But it's not that I'm completely out there no matter what. Here's the thing, guys. Leverage in itself is not a bad thing, okay? So you can have 50 times leverage all day long. If you are funding the whole position size and you don't use any leverage, then every dollar lost is yours, right? So let's say you have a full Bitcoin and it moves up $100, you make $100. It moves down $100, you lost $100, right? But guess what? If you go in with half that size, if you go in with half a Bitcoin and you use 2 times leverage, guess what? If it moves up $100, you make $50, or you still make $100, right? But if it comes down, you're only losing half, right? So as long as you lower your position size, you can up your leverage and still get the same result, just less risk on your side. Okay? So don't automatically assume because somebody has high leverage that they're necessarily the entire account all in it, 80 or 100 times leverage, okay? I mean, now, if you're newer traders, it probably is the way it is, but you shouldn't do it that way. Again, as you raise your leverage, you should be lowering the amount of money you're actually putting in. So you're getting the same result as if you had funded the whole position, but just with a lot less of your money at risk, which means you're getting a greater return on investment, right? Because you're using other people's money, right? OPM, man. I've talked about this so many times before. It was huge back in the 80s, guys. There was even movies done on it, right? 80s, man. Time of greed. Anyway, so, yeah. Let me see here. Blaze, what's going on, ARM? I see you there. Blaze is asking, do you think this is printing a WXY off the 1 hour pivot? Let me see here. Where's my 1 hour pivot? Up here. So WXY here. I think that may be. I mean, it could be an ABC, depending how you want to count it here. Maybe you can go 1, 2, 3, 4, 5. You'd have to be like a 1, 2, 3, 4, 5 here kind of thing. And then here, it would have to be 1, 2, 3, 4, 5. It just looks a little easier to say, okay, it's A, B, and then 1, 2, 3, 4, 5. And then A, B, C here as well. So A, B, C is W, X, A, B, C is Y. Three-leg corrective is what we're looking at, okay? You love Danny DeVito? Yeah, OPM, Other People's Money, is a great movie back in the 80s. I love that you know that. So what are we looking for here? Andrew says Bitcoin 1 hour almost showing an inverse head and shoulder. Again, right here is what Andrew's talking about. Left shoulder, head, right shoulder. I mean, possibly. Again, guys, I rarely look at them myself just because they're so easy to misinterpret. But, this is kind of, it could potentially be it here. But remember, if it's going to be, then what you expect to see right here is larger and larger candles, especially as it breaks out. You want to see them growing in size. Whew, man, my voice. And you want to see volume expanding as well as it rallies up and breaks out. In that case, if that's the case, let me kind of just draw the neckline here now that you've seen the picture. If that's the case, then... come on. All right. Just kind of get that right there. The target, based on the height of the pattern here, would be... Jeez, so much trouble grabbing on this stuff lately with TradingView. About $805 above the point of breakout. So, it makes sense. It carries you right into this supply right here. So this is a supply structure right here, and then you've got another one up here in the wick. So this will carry you right up in here, which you would generally expect anyway, right? So with this, you'd probably be looking at this as a 1 and a 2 here. Now this is a 3-wave pullback. And so it's a 3-wave pullback that's retraced how much here? 61.8. So, I mean, that's a solid wave too there. So what I would look for is a breakout above this swing high right here, which is 19,480.53. If you're playing this as a 1 and this is a 2, then a breakout above that would be the clue that, hey, you go ahead and go long, right? Your confirmation comes on a breakout through the swing high. But that'll give you, again, look at that, almost perfect with the pattern target here. Wave 3 around 20,385. Wave 5 up here around 20,666. Now, if we look at that particular supply structure up here, look at that. I mean, this is a pretty good narrative. You know, it has to do it, but the targets and resistances line up. You can see that we're almost at the EQ here. So let me change the color of this one. Go with this. Bring it down a little bit though. Okay. Now we can notice that right there at the EQ, which is where we normally look for, right there is the 2.0. That would be the wave 5, right? And it gives us 5 up just around where the previous wave of the larger degree completes, which is what we look for, right? So we could sit here and go, okay, well, this is going to be wave 1 up here. Now, the thing I always want to do is when I figure that out, I want to say, okay, well, where is wave 2 then, if that's wave 1, right? And so what I'll do is I'll go, okay, well, if this is wave 1 here, I'm going to bring this on down here, measure out wave 1, and look at the 50%. The 50% and the 61% is right here on the 15-minute pivot. 50% is at this 1-hour supply structure EQ area. Makes a lot of sense. So if we rally, see, we dropped down, we got rejected at it. We came on down, found support down here. This kind of rally back up, hit it, rejected. So we should push on up through it. You know, and then we'll 4, and then we'll get 5 up here. So that'll give us 1, and then we'll come back down and check it as support. We checked it as resistance. We should come back then and check it as support if we break out above it. And then that would set us up further. And in that case, then we might be looking at a wave 3, you know, up here at around where our previous other larger wave 3 is up here at about 22,617. That gives us a 5 up here, right around that daily pivot. Let me make sure that daily pivot is correct there. Yeah, right up around that daily pivot. So again, if we're looking at it and we're getting 5 waves up to the, you know, to the daily pivot off of here, that makes sense, right? We pull back, then we'll break out, and we'll break on that larger 3. So yeah, I mean, looks pretty good. Now we just need to see it follow through. I like the areas where it may be. So for now, we'll assume, if we can get this breakout above here, that we're heading up to this 2680 kind of area. And then we'll look for a pullback down here initially to this EQ right here at around 19,795, potentially down to the 61.8, which is at the 15-minute down here at 19,580. And then we'll look for that rally and breakout there. But I'm not hating it, not at all. I like the setup so far. So we'll see if we can continue to get that follow through, guys. Right? Now, obviously, if we break on down below here, well, now we got kind of, looks like maybe 5, right? And so obviously, if we're dropping down below wave 2 here, I think if we drop down below wave 2 here, I think we're likely to drop down below this wave 2, invalidating those. And I think at that point, we're probably, I mean, it doesn't guarantee that we're going down, but I think we're a lot more likely to head on down here toward 15,415 initial target, secondary target at the daily S1 pivot right around 14,400 or so. Right around 14,400. So if we break down below, you know, this one should lead to this one. We break down below that one, we're probably going there, but we still have to get, you know, down below this 17,000 and change over here. Okay. So yeah, that's what we're kind of looking at as far as that goes. Let me see here. Let me see here. Let me kind of read what you guys are saying here. If you have very, very tight stop loss, you can add more leverage because if the stop loss is hit, you still would have the same loss as any other trade. Helps consistency. In this manner, position size is calculated by how far the stop loss is. Yeah, that's exactly how you should be doing it, guys. Your position size should be based, okay, so you should have an idea of how much you shouldn't lose, right? And so again, I tell you, if you are new, stop trying to get rich yesterday, overnight, whatever. You have to be consistently profitable first before you do anything else. So you should be keeping that 1% rule, okay? And that means you don't risk more than 1% of your portfolio, of your whole portfolio on any single trade. So let's say you've got a $1,000 crypto portfolio, right? So what that means is you shouldn't lose any more than $10 on one trade. And so where your entry is, your stop loss can be no longer. It doesn't mean it has to be at $10. You have to be smart about where you're putting your stop loss. But it shouldn't be any lower. You shouldn't lose anything more than $10. Yeah. And so that's going to then tell you what your position size is. So if your stop loss has to go further down, then your position size has to get smaller, right? It has to, in order to maintain that 1% rule. If your stop loss can be closer to your position, you know, if it makes more sense that it's pretty close to your position, well, your leverage can increase in size, your position size can increase because you don't have as far to go to reach that stop loss. But the goal is to understand how much you should be losing at most if you're going to lose on a trade, and then your stop loss needs to reflect that. And then however far your stop loss is there then determines your position size, okay? So, again, guys, you're going to see a lot of people online that talk a lot of crap about people. You know, do what you need to do. But I'm going to tell you what I've learned in life is not to pay a whole bunch of attention to people who are out there talking crap about other people constantly, because just as in life, it's just somebody, you know, it's the same in trading, right? It's just somebody who hasn't really done anything for themselves, right? So they're not, the best way to say this, if you are progressing at something in life, you don't have time for nonsense and all that kind of stuff, okay? If you just don't, because you're focused on your growth and on your doing more, right? It's the people who aren't that you see out there that do all the high school nonsense, okay? And so you guys just want to be careful, like I said, in life and there on social media with that stuff. Be careful with that, okay? Let me see here. Sarang, what's going on, man? Could you explain how futures trading can affect the price of spot? Well, it's just, it's not that it affects the price of spot. It's spot, futures, short and long ETFs. All these things together determine the value of the thing at all times, and that value is constantly changing. You'll have people that often say, well, this is worth this much. Well, no, it's only worth that much if somebody's willing to pay that price for it. And so in markets, the price is constantly changing, constantly evolving. So price is always only correct at the time that something is bought and sold. Other than that, price is always in flux. And so when people get on these things, or they get GBTC or whatever they're getting into, all these things contribute to the overall idea, the market's idea of what price is. There is no intrinsic price. Bitcoin is not worth $50,000, $1 million, whatever, period, in a sentence. Okay, it's not. And even if somebody's willing to buy it at a price, it does not mean that that is the price for Bitcoin, right? Or the price for whatever you're buying or selling. Because all it was the price for you at the time you bought or sold it. That's all it was. So price is this constantly moving target, this constantly evolving thing. All right, guys, that makes sense? Yeah, so now the way in which futures may kind of more directly affect price, I guess what you would say. There's ways that with by the way, options, futures, these are other things as well, right? So we're talking about futures trading here, but options are another way as well. So if you are trying to acquire physical, I say physical Bitcoin, spot Bitcoin, right? If you're trying to acquire Bitcoin, and you think that you can manipulate the price, or you think the price is going to do a certain thing. So let's say you want to buy more Bitcoin and you think price is going to continue down. So you can short futures, right? Which puts downward pressure on value, right? And then if enough people are doing that, it overloads that side of the equation and price kind of comes down, right? And so then it comes down lower and you can buy Bitcoin itself at that lower price. Does that make sense? Or again, the opposite way, right? You can buy futures and sell Bitcoin, right? But a lot of people, the big money most often uses it as a way to protect their profits. That and options. Okay, so they may think that price is going to do something, but just in case, they're going to protect themselves with some kind of spread, depending on what kind of futures or spot or options product they're looking to use. So there's a lot of it really go in depth there, but generally, the only thing I think you really need to understand is that they all contribute to the value of price at any given time, the value of Bitcoin at any given time. But if you've got a heavy amount of leveraged futures, shorting it, for instance, it's going to make it tougher because that's a lot of think of every dollar, whether it's a futures or a spot or whatever, think of every dollar as a vote for the direction of price. And so when you get a heavy bit of shorting going in there, say on futures, that's going to put a lot of downward pressure on value. Now, if you've got some large buyers sitting down there just soaking up all that by accumulating, right? Yeah. They're counteracting that. So, yeah. Hey, Mr. Wilkes, what's going on, man? Good to see you. Hey there, Bitcoin anarchist. Good to see you as well. So anyway, this is kind of what we're looking for. We can see that as we kind of got down here, you can see that open interest on the sell side was kind of, after this initial dip here, it got lower here. And then it kind of stayed around the same for this drop here. But look at what happened, the buy side open interest. Look at that. Expanded in this area, expanded even more, rallying up into here. So now locally here, we're kind of doing sideways. And so we've got little bits. So we'll see something either bigger, either way coming out of that. So definitely something interesting to watch. We do have a cross here, a bullish cross on the 15-minute. So we'll see what happens. Definitely a good, like I said, a good potential target set here, rallying back up, right? And that'll give us wave 3 maybe right up here around that 22.6, 22.650 kind of area, right? Minimum expected. I do have these other supply structures here, the lighter blue and the darker blue. As always, interested in those lower, but especially toward the EQ areas of those. You'll notice that this one, the EQ, is almost at that daily pivot now. So, those are other things I keep in mind as price drops or rallies, okay? Let me see here. DXY, what's going on with DXY? Man, oh man. So, God, DXY just keeps, really, it's still basically sideways here, guys. Now, I've got this maybe as 4 done here, but guys, there's absolutely nothing screaming that it must be done here. And as a matter of fact, it's quite possible this could still be a triangle, just a larger triangle forming. This could be A, B, and then we'll get a C, D, E, then break out. So it's kind of a pain in the rear end at the moment. We do have some bearish divergence right here on the on the 2 hour right here. Let's see here, 4 hour. And we're neutral right now. Let me see that 15 minute is set still correctly. Yeah, 15 minutes correctly. Daily pivot is now right here. I just like to keep these on other time frames. These, the daily pivot, the 4 hour pivot, and the 15 minute pivot to help me kind of gauge what may be happening here. But this is the bigger picture right now. Now here we are. So again, trading pivots. We're moving in sideways between the pivot and the R1. So we're going to look for either a rejection in this area, sends it down here, and then we want to see if you're bullish, you want to see it find support here and rally and break out above that. If it does that, we're probably headed up here. Okay. At least, I don't know, what is this? This is daily. Yeah, I think we could probably get up here to the R4, 113 maybe even, if we do. But here's the other thing. If we get rejected here and drop below, we have to get a reversal here. If we don't get a reversal of the S1, we're probably heading down below that swing low there. And then we'll say, okay, 3, 4 is done. You know, we're doing the bigger 4 coming down. But again, as long as we pull back to the pivot and rally, or pull back to the S1 and then rally and break out higher, we should be heading up toward that, you know, minimum 108, but quite likely up here around 112 or so. Now, the only other thing that changes anything is if we just rally impulsively through the R1, we don't even come back to the pivot. If we do that, there's no reason to think that we shouldn't rally all the way up through the R5 here. Okay? So that's kind of how I'm watching it at the moment here. I mean, you know, if we look at this, we go 1, 2, 3, 4, 5. 1, 2, 3. Like I said, 4 or A, B, C, D, E. 4 gives us 5. So that's what we're kind of looking at right here. If it continues sideways, again, that gives Bitcoin a lot of, it takes any kind of downward pressure you may think is on it off of it, because, you know, it's just kind of just heading sideways there as we do that, okay? Possible cup and handle. You talking about right here? No, you said daily, didn't you? Where are you looking on the daily here? No, I'm not. Well, okay, right here you mean, right? Okay. I think this is what you mean. Cup and handle. Yeah, potentially. Potentially. And if it is, let's see here. Let me look at this. That handle should pull back at least 38.2 to 50%, but not really any more than that. 50%, so it's where you want it to be. Let's see here. 110. It takes it up there. Pattern targets are usually wave 3s. So could see it potentially heading up even further beyond that. Sure, maybe. Maybe, yeah. Not hating it. But yeah, definitely a possibility. I mean, by the way, guys, if you're looking for cup and handle patterns, this is kind of what you want to see here. You notice how price just kind of stays along the edge here. You have a little bit of a bump here, but basically just kind of stays along that saucer there. It's a bit sharp. You want to see it the more stretched out it is, the more saucer-like it is, the more powerful it's going to be, like a bowl. The sharper it is, the less likely it's going to play out as you expect. But it's really just right here. Other than that, it's kind of sideways here, right? You don't want to see large, big moves into it. You know, going like this, that should just go ahead and invalidate it. You want to see it like this, where it sticks along the movement here and doesn't like really break up into it along the way. So yeah, just some things. You want to see your handle pull back, usually 38.2, but no more than really 50%. If you're getting beyond 50%, like, you know, 61.8, 70.5, something like that, then really you don't know. Because what you're looking for is what's going on with it here that makes it, right? And so this is this kind of casual move into this. This is the pullback, like a rubber band pullback, and then you get the release, and boom, that's a little breakout, and, you know, kind of rally up hard and strong. So yeah, you know, possibility, but we'll see how it goes there. It kind of aligns with the other things we're looking at. Why is that not working? There we go. So yeah, maybe. Let's see here. Excuse me. Let's jump into stocks here. NASDAQ Composite. Let me see. NASDAQ Composite. There we go. All right. So there's NASDAQ Composite. It looks like we got 1, 2, 3, 4, 5 here down. Possible wave 2's complete here around the 38.2, but I don't know. I'm thinking maybe it'll go higher. And if so, you know, minimum 50% here at 41. Oh, I'm sorry, at 11,256. And potentially it might push up here to the 1 hour pivot. But, you know, this pivot ends at the end of today. So, you know, we've kind of filled in this gap more or less here. So could be done again. But 1, 2, 3, 4, 5. I mean, it looks like it's 5. Looks like it's a leading diagonal. Done at that 38.2. We can look for that breakdown. If it breaks down from where it's at here, minimum expected wave, the larger wave 3 target down here at 90, 97. Locally, this could see target of 98.10. If wave 2 is complete there. So we're looking for a breakdown below wave 1 to say, okay, it probably is. Let me see here. We've got the S&P E-minis here, SPX E-minis. Again, same idea. 1, 2 maybe complete. This one's a little odder here. I'm a little more odd. I'm not really sure exactly the count here. It looks like it's probably a 1, 2. And then we got like a 1, 2, 3, 4, 5. So 1, 2, 1, 2 maybe. 1, 2, 3, 4, 1, 2, 3, 4, 5. ABC. So it could get like a 1, 2, and then 1, 2, and then 1, 2 again. Really what we're looking for is an impulsive breakdown below this 37, 45, and 75 there. If we can do that, wave parentheses 3 has that minimum expected target at 30, 47 and a half. Let me see here. And then we've got the Dow here, which again, remember guys, we go from the NASDAQ, which is heavily tech heavy there, to what's it called there? The S&P, which is still pretty tech heavy, but it's got a little bit more other things in it. And then the Dow, which is very more is what I said, yes, is a lot more broad-based, so you have a lot of different things in there. All right. Let me see here. Let's see here. So, yeah, so the Dow, we're kind of looking at the same idea here. What's going on? I'm looking for a breakdown below wave B support here at 3166 and 0.01. If we can get that, that should indicate that wave circle 3 is in progress down here to a minimum expected target of 26,438, guys, getting us out of those 30,000s, right? So, you know, again, the idea being that with all three of these guys, my primary count says like 1, 2, 1, 1, 2, 1, 2 here, okay? So it's like 3 of 3 of 3 that'll break down, which if that's correct, we'll see a strong move down, okay? But it's because it's this overlap like this 1, 2, 1, 2, 1, 2 kind of thing. It's possible it could be 1, 2, 3, 4, 5 as a leading diagonal, and we'll get a rally up here, you know, like for the Dow here, you know, potentially up here at least to around 33,200, 33,100, 33,200, maybe even up here around 35. I said, yeah, 35,000 up here. But so, you know, again, could be a leading diagonal leading in. If we get a breakdown below that swing low here, though, that should indicate that we've got that 3 of 3 of 3 going on, okay? And so that's what we'll be looking at, okay? Yeah, so I mean, you know, again, guys, nothing really excitingly positive about the stock market. I think we've had I think we're looking at the worst first 6 months of the year since like the Great Depression, basically, something like that. It's been quite a while, so really bad off there. Bitcoin has had its worst quarter since 2010 or 11, so pretty significant with Bitcoin as well, guys. Covector, yes. What's up? Says what time markets close today, regulars? No, I think they're gonna close a couple hours early. Usually when it's right before a holiday weekend, U.S. markets will close about usually right around 2 p.m. or so Eastern. Now it depends on what market you're trading. Sometimes the bond market does something a little bit different, but in general, markets should close a couple hours earlier than usual today. Again, they will be closed on Monday, so just keep that in mind. As far as not just if you're trading U.S. markets, but also the impact that U.S. market maybe has on whatever market that you're looking at. Again, we talked about crypto at the beginning of the show there, and how, you know, with the big holiday going on, there'll probably be a drop off in liquidity because people just aren't really going to be trading it here from the U.S. too much during, you know, at least not in any specific size, any real size through the weekend. They'll come back on Tuesday and get into it. So yeah, keep that in mind. Let me get through these here real quick. I'm going to get ready to go here, guys. Let's see here. Oil. Had a little bit of a rally today. But again, you know, the idea that we got that 1-2 and we got a 1-2 here now. Locally, looks like we've got 5 down into the low, which broke down below wave B triangle support there at 104.90. Should indicate that ultimately wave 3 is going to be in progress. Right now, we've got a rally to around almost the 50%. Maybe done, but I think we may have higher up here, which could see the 61.8 at the daily pivot. Let me make sure that daily pivot's correct. Yeah. And so we could see it maybe move up there, but then we should look for a breakdown and head down lower. If it does break out above this swing higher, which it's almost done, then all you're looking for is a breakdown below. This would be wave B here at 106.88. And so if we do break out above that, then a breakdown below that should indicate that we're headed down in wave circle 3. And then, of course, you know, we've already broken down below this wave B over here. So wave Roman numeral 3 should be in progress lower, okay? So again, you know, contrary, you know, again, guys, you're not going to get a whole bunch of nonsense from me as far as, you know, blowing smoke up your rear ends and stuff. You know, I've been bearish on oil. I guess you can say bearish on oil since that 130 mark, right? And so far it's holding up. We'll see. You know, but we're still going to change. You know, if new information comes in, guys, on what am I trying to say here? I just completely lost my train of thought. Sorry, I'm thinking about my throat. It's just hurting a bit getting back into speaking. I forgot what I was saying. Anyway, so oil, I do think oil is probably talking. Oh yeah. No matter what you think, guys, no matter how hard your conviction is for something, pay attention to the charts. Let the charts help you out. And if new information comes in the charts, it's okay to change your opinion. That's fine. I see a lot of traders again, and usually it's the fact that they're victims, you know, in their minds. They're, you know, it's somebody else's fault. Everything in their life is always somebody else's fault. But they'll get really upset about the idea that you change your position, your mind, or your thoughts. And unfortunately, they'll never... It's sad because they'll never get to see just how great it is to trade, right? Because they're always going to be held back by their attitude. And they're not going to understand that being a good trader means, you know, again, I keep pointing out to Peter Brandt, because it's such a great saying, you know, strong opinions weakly held. That means if new information's coming in that makes it, that kind of counters what you were thinking, you should be changing your opinion. Okay, guys? So, yeah. Anyway, so this is kind of what we're looking for. The only thing that changes anything is if we break out above wave 2 up here. As long as we're below that, this goes up in 3 waves and breaks down below the second wave, we should be headed down here. And then, of course, lower with the wave Roman numeral 3 down here around minimum expected target down there around 83 or so. So yeah, natural gas continues its overall its decline lower, right? I think we're on a wave 4 locally with that. Let me see what we got going on here. Yeah, looks like we're ready to break down. Again, looking at the idea that we are topped out, we're 5 waves up here. Now the question is this, there's a couple ways you can count this. Maybe you can get a 1 out of this here. I think this is better. 1, 2, 1, 2 here. And then, we've got this 1, 2, and then 1, 2, 3, 4. Looking for 5 down here around $5. But, the question is, do you have it as a, this is 1, 2 here. Is that an A, B? Or is this a 1, 2? And that's what we'll find out as we continue lower. But right now, right here, we got the rejection there at the 50% retracement. We got 3 waves up. We're looking for a breakdown below wave B here at 5.625. We can get that. That should signal that wave 5 has a expected target of, like I said, 5.022. It's based on the height of wave 4 here. So that's what I'll be looking for there. But yeah. So, natural gas and oil both seemingly wanting to head lower. And we'll see what we can get with that. Right here on natural gas anyway, you can see that we broke down below this wave 4 over here. So again, making me think that 5 waves is done here. Kind of zoom out here a bit. Now your 4 hour, we're down here near oversold. We bounced into oversold on both there. And then as far as the daily goes, we're down and oversold here, and we're about to dip into oversold. But if I'm just trading pivots, guys, here's what I see. Moved in here, rallied up, rejected the pivot. I could see us potentially rallying to the pivot, but I would expect a rejection there and then to head on lower at least to the S1 down here, which is right around this high volume node. So, it could be 1, 2, 3, 4, 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5 maybe gives us 1, 2, 3, 4, 5. But again, the idea is that it would just rally right up. You see this supply right here? That's right there at that. You see the EQs right there around that pivot. It's where it was rejected already. The support here. So again, thinking that if we do get a rally up, even if it drops a little bit first and then rallies up, we should get rejected there. But we've been rejected once, so we could continue down lower. And if we do, again, looking at least toward this S1 pivot down here at around 3.96 or so. All right. Let me see here. Real quick here. I'm just about done, guys. Silver. I mean, there we go. We've got an initial target right here at this 23.6. If we continue higher, usually we'd look at the 38.2 and then the 50, but I don't know. I think the 50's got more, a larger area supply there. It seems more likely to draw price to it. So if we break out higher, we'll head up here to the 50. But, I'll break down below wave 3 then. We'll send us down for wave 5. If that's in there, this is target about 1894. If we make it up to 50%, well, the 38.2 would give us a little bit lower there at 1878.5, and then 50 would give us, if we got up to 50, as an ABC, then that gives us a wave 5 down around 18.64. So yeah, I mean, again, nothing's changed. Still think silver's heading lower. You can see on the decline here. You can see that we're getting some larger candle spreads there. We're getting volume expansion as it's continued down into it. So yeah, not exactly great for longs of silver there, right? And then, of course, gold. Gold, a little bit different here. I'm not exactly sure what this count is. I had this as maybe like a 1-2 leading diagonal here. And we had this move up, and so then I kind of moved it down to, ABC is 1, 2, and then ABC is 3, 4, and then ABC is 5 here maybe. Probably going to have to go back to it. But basically, as long as silver's continuing to go down, gold should continue to go down. I'll have a better count next week as I take some time to really kind of look at it. It's just so ugly here. But again, like silver, you get the volume expansion, large candle spreads coming on down. It's just a bit more choppy in doing it. Gold was. And so now we've rallied kind of back up into this area of support here and getting rejected. Printing almost a bearish engulfing right now on the 1 hour with about 3 minutes left, 3.5 minutes left. There's your 4 hour. Decent looking 4 hour candle here. Not so great looking here. Daily, we are oversold. We got further to go for oversold for RSI. So, again, we've dropped below the weekly pivot here. That was all that sideways around that weekly pivot. Once we got through it, big candle, and then there, big volume coming in. Daily pivot is now right there, right around the 1830 level. So kind of, at this point here, looking at the idea that if we do rally up, potentially getting caught right in this kind of confluence area here and then being sent back down lower. But yeah, nothing's changed on that as well. You can see right here the higher volume node. You can see it kind of doing its work as support right now. But, coming up to the bottom of it here, we drop down. That becomes resistance instead of support if you drop below it. Okay? So that's kind of what we're looking at there. Jump back on here to Bitcoin again. Just wanting to see a breakout above this swing high here to indicate maybe that we've got wave 1 target up here around that EQ. Right now it looks like we've got 3 waves. You can kind of question this here maybe. Got this here. So, maybe it's like I look at this, I go 1, 2, 3, 4, 5 gives us 1, 2, and then 3 here. But maybe it's ABC. So W, X, and then A, B, C would be Y. So what I'm trying to say is just because it drops down below the swing low here doesn't mean that this count's invalidated, but it does mean that you got to watch for a breakdown below the swing low there. Let me see here. Now, see, this is 5. 1, 2, 3, 4, 5. Can't pull this over. This could be a leading diagonal, 1, 2, but then where's the rest of it there, right? So again, the count, we're zooming into like the 3 minute here, and so the count becomes very, very a lot of overlap going on there. So, is it really what we think it is? See, if I go in here, it looks like 1, 2, 3, 4, and then 1, 2, 3, 4, 5. So that could be 5, and then here, and then 1, 2. See, it really comes off really odd here. The other possibility is that there's a triangle going on here. So you go A, and then we go A, B, C. We'll get D and E, and then we'll break down for C, and then we'll head up. So that's still a possibility as well. Might actually be if we break down, that would be the idea of what's probably going on. But again, as long as we break on out above that swing high there with this 3 down, it looks like it's 3 and we're heading up. All right, guys. So that's where we are until we're breaking out above, really we kind of need to get about this one up here. This wave X at 19,763 and 12 cents. That'll say, okay, yeah, probably, most likely 1, 2. We're headed for 3, right? Locally here, could have 1 done. 2 could be done or working on it. So what we need to see is a breakout above that swing high right there at 19,648 and 13 cents. And getting that is going to lean toward the idea that 1, 2 is done, and we've got 3, 4, 5. So we got a 1 target up here again around the EQ of this 15-minute supply, 20,670 kind of area. Doesn't mean it can't go higher or shorter, but just generally, you know, if we look at our general extensions, that's where we would expect to go, okay? All right, guys, so that's where we're at. But, you know, again, if we do break down below this wave 2, I think there's a good chance we'll probably break down below this one. And if we do that, then there's an increasingly good chance, the odds become a lot better that we're probably headed down to around 15,415. Our secondary target there, 14,380, 14,385 kind of area. But we still have to break down below the swing low over here. We still have to break down below this 17,500, 17,600 kind of area, you know, to guarantee that we're going lower, right? Until that, we could just pull back way here and rally back up. But those are my thoughts. That's how I'm kind of watching this play out as it does here. So, yeah, we'll see. I hope you guys have an amazing weekend. If you're in the U.S. celebrating 4th of July, please be safe. We'd love to see you guys coming back. Don't forget, take advantage of that coupon if you've got a chance, guys. 20% off the sale price. Sale price is already 40% off. So even on a monthly BMA 1-month thing, you know, you can get 40% off the regular price plus an extra 20% off that. But definitely is worth a lot more money there on those larger time frames and larger memberships. So hopefully we'll have you come in. If not, I'll be back on Tuesday, 11 a.m. Central Standard Time. Check in with you guys after that crazy weekend. And then, like I said, here over the next few weeks, we'll transition this to where I get the Trader Psychology podcast going. And then these will just be uploaded videos during the week, okay? All right, guys. Thanks for tuning in. As always, remember, the only thing you control in the market is how much you lose. So please keep working on the risk management. And probably more important in that and in life is to work on, you know, your whole mentality, right? Your whole attitude. Make sure you aren't a victim in your own mind, because if you are, you're never going to get to where you want to get. They'll always just be dreams, guys. You absolutely have to believe you can do it. And in order to do that means you're not a victim, which means you have to take responsibility for the actions you take, the decisions you make, and then learn from them, okay? All right, you guys have a great weekend. I'll catch y'all next week or over in Discord if you guys are there. Take care.